This was not a good week for those in the real world. I only pop into the real world once in a while, so things went okay. But for others, we had bad retail sales data, falling consumer and business confidence. Coronavirus cases were surging, but not deaths. The Delta fear-mongering was pushed to the max, with global economic data disappointing at its fastest pace since the lockdowns began over a year ago. And oh yeah, I almost forgot. The U.S. lost another war. The S&P 500 and the Dow were on track for their worst week in 2 months, but the last-minute melt-up saved the day. Small caps literally exploded higher on Friday from down around 1% in the pre-market to up almost 2%. Well, that was options expirations for you, as it was the third Friday of the month. On the week, all U.S. majors were down, with the small caps being the worst. But it still wasn't as bad as China. The Golden Dragon China ETF suffered its eighth straight weekly loss, its longest losing streak in a decade. At the same time, energy stocks were clobbered. As Rabobank notes, oil markets were hit by waves of selling pressure as short-term systematic funds pivoted from liquidating long oil future positions to building outright short positions. So watch the energy market for potential opportunities. In the meantime, let's take a look at the charts. And we're now taking a look at the 6-month daily chart on the spiders. The close on Friday was 443.36. And as I've drawn many times, we have this channel with the bottom line running through like that and the top line running through like that. Not a straight line, but you get the idea. So we keep bouncing off of this bottom trend line, and have we done it again with only a few days down? Well, there were only a few days down here, here, and here. This had a few more days in it, but potentially that could be the bottom. Now, let's move down into the oscillators. Volume looks fine. And then there's the back. We're elevated just above that too, and we have this little downtrend, but we had the same thing here and here, so perhaps we are going to bottom base and head back up next week. Now, if you look back here from March, we have this trend line moving through very gently on the way up. So things are actually gaining a bit of strength. And you can see the same upward trend here for the most part. It's not really evident, but you can kind of see it moving on up. This one's not as evident until you get here to say mid-June. We're slightly moving on up. And then into the stochastics, this is perhaps a little bit better. Moving on up through there. And then down into the Williams. You can see that from mid-June, heading on up. Everything seems to be gaining a little bit of strength. And I think you can see that in the market as well. We continue to elevate higher and higher and higher. So I think we may have hit bottom. It's possible that we come back down and do another double dip, such as we did here and here. But for the most part, I think we're still intact. We're still within that channel, and I think we still continue on up. And for today, that's ChewDog Charts. Thank you.